Greetings from One Local Board. Happy Friday to you guys. Finally Friday, June 3rd, 2011. A short week, but a very profitable week. Finished up 3 days in the market this week, Wednesday, Thursday, Friday. Of course, we had Monday and Tuesday off from the holiday. So kind of an oddball week, obviously. We're used to having all the news events all lined up properly for us, but this week we shook the news events up. A lot of traders coming back from vacation over the long weekend, and I think a lot of traders took the whole week off this week, knowing that they were probably need some low volume. So we kind of had a kind of a rough and tumble week, not what we're used to seeing, but boy, we sure as heck made some great lemonade with the lemons we got. And of course, here on a Friday morning, we wrapped up a great week with non-farm payrolls. Now, non-farm payrolls, remember, this is the biggest news event we have. This is the granddaddy. The only one that's any bigger will be the FOMC announcement, right, from the Fed, or maybe not even GDP. This has the most information that the most people are using at the same time. Now, non-farm payrolls, we talked all about the specific personality of non-farm payrolls this morning. In fact, that was what we spent most of the time this morning, was just talking about what you're going to experience before, after, and then, of course, the rest of the day once we get through the 8:30 news on non-farm payrolls. So this morning, we had our eyes on 8:30 news. We knew this morning, though, very simple. Non-farm payrolls, you want to get in early, make your money early, and it's a Friday, so get out early. That was what we knew we had to accomplish today. But we knew also non-farm payrolls will typically have one of two different personalities after 8:35. 8:30 news for non-farm payrolls after 8:35, we're usually going to see one of two things. Either a very fast market, and I'm talking too fast to even see. Sometimes non-farm payrolls, because they're the big news event, you've got the hourly earnings, right, average income, you've got our new unemployment rate. So obviously lots of stuff going on, lots of reasons for traders to be trading. So sometimes 8:35 rolls around and it's too fast to trade. And believe me, guys, I trade crude, I trade gold, right? We trade some pretty fast markets. Non-farm payrolls even keeps me, right, on my heels a little bit. So at 8:30 this morning, I was expecting possibly a very fast market, untradeable. Or the other side of that coin is sometimes if the news comes out unexpected, traders almost stall for a second as they try to figure out how this puzzle, right, fits together. Remember, the non-farm payrolls has more than just one news event that's released. Okay, so more information than we're used to seeing in one news event. So lots of stuff going on. So what happens is traders may, of course, lose confidence based on what they see. So sometimes it moves way too fast, but other times it moves very sluggishly sideways, and then it finds its direction. So we knew we had one of two things to expect. So what did we do? We prepared for the sideways chop, but we hoped for the big breakout. So we prepared for the worst and we hoped for the best. So what does that mean? That means I was prepared for not only a sideways range, but I was also prepared for what if price was to jump. So we found the highs, we found the lows. What if price falls? So we were prepared for nothing at all, as well as one of the biggest moves, right, that we could see. So we were hoping for the best, but we prepared for the worst. Now, after the news came out, we got scenario 2. We didn't get the move too fast to trade. And I think a lot of it had to do with the fact that it came out pretty much as expected, a little bit lower obviously, but the big thing was it looked like, again, some of the traders were still coming back from vacation and we didn't have that high volume environment that we're used to seeing. Now, this week, like I said, is a little bit different because the holiday on Monday, I have a feeling a lot of traders took the whole week off. Obviously, we made some pretty good money this week, but when we saw non-farm payrolls this morning come out a little bit sloppy, that was what told us right away, okay, now we know what that scenario is going to be. So we didn't get the fast price action. We got pretty slow and sloppy, which developed into a sideways range on gold. So gold, we had a sideways range on gold going. Now, a sideways range is a really easy price structure to trade. Buy the lows, sell the highs. If I get a breakout, I'm not going to buy the highs. I'm going to wait for new higher highs, then buy the pullback. And that's exactly what happened on gold. Trading sideways on gold, news comes out at 8:30. We don't get that big gangbuster move. It chops around sideways. About 8 minutes into it, though, right? 5-6 minutes afterwards, then the gold makes a jump. We get the breakout on gold. So it slops around a little bit as the traders are trying to put that piece together, right, the puzzle together, and then gold decides, let's rock. So gold jumps up. I have to wait for a pullback, and I bought the first pullback at 8:30. So at 8:30 this morning, here we are going sideways. You'll notice we didn't just jump up or jump down. And by 8:33, right, we get this breakout. It was a little bit surprising too, because literally this thing just took off without ever looking back. And my exact words were, all right, well, I would have liked to have grabbed that entry right here, but we didn't get a pullback. So like a good professional trader that I am, I waited for the pullback, right? And we bought the first pullback. As you can see here, we got a little bit out of it. 835 plus 5, and then of course came tumbling right back down in, got stopped out at my point of entry -7. Now we were talking about some of the difficulties of trading directly at 835, and we talked about the sloppy price action and having a lot of slippage because it's moving quickly that close to the news. So that was a great example there. I lose my 4 ticks, my $40. It's not going to kill me, obviously, but this was a great example of what happens after 9:35 or after 8:30 non-farm payrolls. The market is a little bit sloppy. Now, I also took a very similar trade on crude. Crude went in the opposite direction. Crude initially dropped. I tried selling a retracement on crude below the previous low of day. It didn't go anywhere either. So my first 2 trades after 8:30, one on gold, one on crude, both were those small losses. So here we are, right? I bought the pullback, got one target filled, then got bounced out, and we go sideways again. Now in this case, we get a little swing high up here. I mark up my swing high. I really want to get above, right, above that 37.3, so I want to get above that level we marked up earlier. And of course, here we have your breakout. Now, when I go back down in, remember, there are 2 ways of looking at this. The first thing I think about is whenever we expand out of a sideways range, I make a new higher high. Even if we fail, it's still giving me a clue for things to come in the future. So that attempted breakout is almost like the buyers giving me a little bit of a signal saying, hey Joe, we're probably going to try to push the highs again. Okay, so when I saw it fail, I knew right away we're expanding the range to the long side. That means expect at least another attempt. So we knew another buy opportunity would probably come. But remember, when I also see those buyers fail, it puts me in the mood for a quick short-term scalp back down. So don't forget, I could have easily grabbed, right, a 2-step pattern short right here and sold it on the way back down, knowing that the sellers are most likely in control because the buyers just failed. So when I see price come up and then come all the way back down like that, and the key here is outside of this range, right, this sideways range we'd already defined, there are 2 things I think about. The first thing I think about is buyers just failed, look to sell here with big sellers. The next thing I think about is that just gave me a big clue. So look for another potential run up. And ultimately, the theory behind it is when you have a range, a predefined range, and we expand out of that range, the direction of the expansion is expected to be the clue, right? So next we expect rising prices again. That's exactly what we got too. So we got price comes right back down in. We're trading sideways here right now. We marked up a swing high. That swing high was not close, was not above. Okay, I would have wanted that swing high up here, right, above that level. In order for me to really use it, it would have needed to be above that level. That way I could really get above that, again, that 37.3. So 37.3 is right there. I'm now waiting to get above that level. When it breaks out, 9 o'clock on gold, I'm waiting for it. This is a 4 range entry. There's going to be 3 trades here. There's the 4 range wave long 1. That gets me in, right? I take my profit and run. Price comes back down. I get into a wave pattern long 13 range. That gets me in, bounces me out. We see more big buyers enter. We jump up again, new higher highs, buy a pullback again, right? And of course, final target off at the top of that wedge.